Good morning, everybody. Welcome to the Trading Market Technicals morning call video for Monday, December 16th. Pause day on Friday. Pretty much most of the indexes had an inside day. Took a little breather from a couple of days of selling. Dow Jones did manage to close up 15.93. Nasdaq as well, $2.57. S&P down 18 cents, and a Russell up $3.78. This is just a basic pause. We do have a little bit of developments coming in the overnight session on Sunday into Monday. That's about 2:30, 2:35 here in the early morning Monday morning session. And China came out with their flash PMI and really missed their numbers. That actually put a lot of worry to a lot of market participants, and we had a little bit of a flash crash, believe it or not. In the ES, we ended up hit the low of 1754 from a close of 1772-ish or so. So really sold off pretty hard, and now is actually starting to recoup some of that loss. And we're down about 5.25 handles right now in the pre-market. We'll see if that's going to stick or not, though. We are getting into now is really the time if we're going to see any type of push higher for that Santa Claus rally. Remember when I mentioned a couple of months back, I said, actually even probably a few weeks back, I mentioned as well that we've been up at these elevated levels all of 2013, really the big push from October the 9th. Maybe we don't see a Santa Claus rally. And if you remember, I also mentioned that we did a little bit of history and research that 48 out of 60 times we were up, and the balance, when we were up at these highs, we did not get that Santa Claus rally. Doesn't mean that's not going to happen. I'm just saying, just use caution here. A lot of cracks are starting to show up in our indicators. Now, that doesn't mean that the markets can't hold here going into the end of the year, which I think basically it probably will. We might see some weakness driven in the markets, and I see stocks taking some profit taking, but this definitely is going to be a stock picker's market in the next couple of weeks. I do see some weakness, though, coming into the first part of 2014, unless obviously some sort of a miracle happens here and we just continue to move higher. I just don't see it. I don't think that's the case. But again, price is what's king. Price is what pays us, and that's what we look to follow is price. All right. So let's go right into the indicators. Here's the bullish percent SPX. As you can see, I'm sorry. This is the bullish percent energy. I apologize. And I wanted to show this to you because, as you know, we like to trade crude oil, gold, and of course natural gas. And as you can see here, we are now on a sell signal from way back when here, and now we're starting to roll over. And this is actually a very good sign because this is going to probably get us to get back in this USO trade, which I'll show you in the chart segment. But I'd like to see it really come right back down to that 50 percentile. Right up in there, and then if the markets can stabilize and hold and we get a buy signal, that would be a better buy. As you can see, we're oversold here in that indicator, so that's a good sign, as well as our stochastics and MACD. So let's keep an eye on that USO. Right now, no trade, but let's just keep an eye on it just to make sure if we get a big push. Crude usually gains some strength going into January, and then starts to lose its luster right around February, and then of course, then it really starts to pick up until the driving season happens back in May. All right, bullish percent SPX. This is exactly on a sell signal, as you can see here, and now it's starting to widen, gaining momentum from its moving average. So as you can see here is the S&P in the line chart. I would use caution here. Again, that doesn't mean we can't counter trend, retrace back up to this area for the next couple of weeks, and then of course sell off again. So that's what I'm going to be watching. Bullish percent XLF, the banks, that actually went on a sell signal as well. And as you know, I like the banks, and I do like the banks for a 2014 trade. I think as interest rates rise, can put more money in their pocket, more money on their bottom line. I think that's going to be a great trade. Gold. Let's take a look at gold. Now, gold, I'm a short seller up at these levels here at 1285 to 1300, and I'm a better buyer at 1000, anywhere from below 1000 to 1150. So right now, no trade here in gold. That's the reason why is that we're kind of stabilizing here. So if you could even draw a little channel and a break below, we'll get that flush. And I would not doubt that you wake up one morning and you'll see gold down $50, and then that's going to really set the tone. Okay, but reason why? Palladium. Look, palladium just can't get out of its own way. We did break out, failed breakout, broke down, kind of retraced back up, and now we're back here in no man's land off of the symmetrical triangle. Watch palladium if you're looking to trade gold. If palladium starts to break down, gold will follow, as well as all the precious metals. All right, now let's get a little bit more. Let me show you WTI. As you can see here, capped at 200-day moving average. We also were at the 20-day highs, and now we're starting to roll back here again. I like to see this get back to the 95-ish area, even 94, stabilize and break back to the upside. And then I think you're actually going to get a bigger push to the upside. I wouldn't doubt if we see anywhere above par to 102, 104 area in WTI. Okay, stocks above the 50-day moving average here, big sell-off, and as you can see here, we broke down, and this is something that again is worrisome, because as you can see, when you get to these areas, now let's see if we get a deeper push lower here, back into that 40-50% area, and then maybe we can reevaluate it and get that little bit of that dead cat bounce that we're looking for. Here's the VIX. The VIX is still on the outside of its Bollinger Band, has not closed inside yet, right? Once you get an outside close, we need an inside close to confirm that we have indeed a buy signal in the SPX and then the S&P 500. We did not get that. We are still up above and elevated. So until we get that close, now we're going to need another close to the downside. So if we close Monday inside the band, that would produce a buy signal, and then we need to take out that candle's low. Okay, so just keep an eye on that. New York Stock Exchange new low. We did break out, but we came back in again. No big deal. Usually happens. Let's see if this can continue to break back up. But we start to see this indicator. It's an important one now, especially in this time. I like to see this thing start to break. If we start to break higher, then I think you're going to see a deeper downside correction here. Let's take a look at the McClellan oscillator. And again, it's sitting right above this neutral area, above 60, below 60. I like to see this really start to break down a little bit, and then you would see some further downside here. But right now, we're still in neutral territory, really not giving us much of anything. But you can see we're starting to kind of drift lower here, and then that's all we need is that one big flush here. Okay, I want to show you the Morgan Stanley Worldwide Index. Even the worldwide indexes are starting to roll over here. That's not what you like to see, even though this is still intact, but we are starting to see cracks here. So let's see if we can eventually, if we start to rally, I want to see all of these indicators I'm pointing out to you starting to reverse. If that does not happen, you're going to see a deeper downside correction. There's no two ways about it. New York Stock Exchange, new highs, new lows. Again, I've been showing this to you for weeks. We are now just barely breaking zero, and then we got back, we got up above zero, but barely. So again, a lot of these indicators are in trouble, and that's something that we really need to pay attention to. Okay. All right. Now let's go right into the chart segment. Here is the ES on the daily chart. As you can see, we are sitting on the 200. There's the 8, the 20, the 15, the 200. Here's the daily 200. And this is the area here that we are going to need to watch closely. As you can see, we're starting to roll over on moving averages, so we're starting to see some bearish divergence here coming in from the moving averages rolling over. All right, but again, still in an uptrend, but just use a little word of caution. Here is our levels that we were looking for that I pointed out. Here's that 1752. We missed it by 2 pennies, and then we bounced. Now, again, this is here. You can see the bearish symmetry, lower lows and lower highs. The 8 hasn't crossed above the 20 on an hourly chart since last Wednesday. So again, we can see we have a little difficulty here getting above our moving averages, but also really in order to break, we're going to need to get back above main pivot, and right now we're way below that. Main pivot comes in at 1772, just round that off, but as you can see here, not looking too good for at least for this morning. If we get a push lower, I would be looking to see if we can break that bearish symmetry in the intraday sometime late this morning. If that happens, then I could probably see we get a good test back up into these areas here. Okay, but I wouldn't count on probably challenging the highs at least anytime soon. Here is the USO, and as you can see, we're getting close to another good area of support where we would look to probably nibble in a little bit. I'd like to see 34. I like to see we get back into this area here, kind of base a little bit. Now remember, just because price gets down there, we want also a trigger. We want to see that reversal candle take out the previous high, and then that would be an absolutely good spot to start legging into a long trade. GLD, just to show you right up in here, back in this area here, anywhere between this neckline and that 50-day moving average, I would look to put on a short position in GLD. And again, just sitting here sideways inside day, very quiet on Friday, as you can see. But the moving average is starting to unwind, which is actually a good sign. When his moving averages start to unwind here, this is a pretty good sign that we're getting that much needed rest and break. But if we lose this, the next target is going to be the 50-day moving average. So we're going to need to see today the spiders take out Thursday's high, okay, or take out Friday's low. Then I think you see the 50-day moving average. If not, you probably retrace back to the 20. That's what I'm looking for. Thursday's high, Friday's low. Okay, a break below that and a break below that opening range. I think you're going to get that. Probably that trend going to stay intact for the day. Diamond, same thing, looking for that 50-day moving average. As you can see here, coincides nicely with that horizontal resistance, which was resistance, now support. So this is the spot I'm looking for. We need to take out 158.42 really in order for us to get at least retrace back up to the 20-day moving average. Same thing with the transports. As you can see here, bear flag I pointed out last week, broke out of the bear flag, and now we're just kind of retracing back. But here, again, still have negative negative pattern here. This negative, bearish pattern, excuse me, is really just, we're starting just to chop around at the upper end here. We need to see this start to really base and then start to break out higher. But if the transports start to lose momentum, you got to use caution here, guys. All right, IWM, same thing. We have 2 days of an inside day from the previous day, from Wednesday's breakdown. So again, not looking too good. One of our leaders just basically clinging to the 50-day moving average as well. XLF, we had a little bit of a bear flag. We did break down here, but doing nothing wrong. I like the XLF. If we lose this area, of course, we'll get that 50. But if it stays around here, that 50 will start to come back up again. But again, not doing anything. There's nothing wrong with this chart. Still holding true from higher highs and higher lows. And then, of course, we got Goldman. Goldman doing really well here. As you can see, we have this area here, but we're at the targets here. I'd like to see it come back in, maybe retrace back 50% from the high to low here, and then look to reevaluate it. I do like J.P. Morgan. As you can see here, really just hanging around. Here's the gap area of support, and this is just kind of just giving it a little bit of rest. I like the Bollinger Bear starting to come in. I think you're going to see an explosive move with J.P. Morgan as well as Citibank. And Wells Fargo is another one that I want you to keep an eye on. Here's the networking sector. As you can see, we're weak here. So looks like this thing may plan out after a long-winded wait here from this neckline, from this head and shoulders. If we can lose that 200, if we lose that 200, I think all bets are off to the upside, and we probably will reach that target. So that's what I'm watching, is that IGN at 29.70 in the IGN. So keep an eye on that. And if you wanted to, if you didn't want to play this, a good thing to do is I would look for, in the IGN, start breaking down and looking for the weakest networking stock in this ETF, and look to play that. That's actually another way to play it. And Apple finally pulling back here. 543, 540 would really be a good spot to look to buy in. But again, Apple's starting to pull back here, as well as a lot of the high flyers, guys. I mean, that's another red flag. And lastly is the Qs, just basically clinging on the 20-day moving average. So let's see what happens today. Let's see if we can get back. If we see some weakness in the morning and we can reverse, then I think that we probably may get a little bit of retracement, maybe at least up to that high area, or challenge the high going into this week and next week. But if we continue to stay weak, and we really don't get a bounce, I think it's going to be kind of an iffy 50-50 here, because if the markets start to sell off, and I think you're going to have a lot of these portfolio managers really locking in profits instead of defending it. So just a word of caution. Take it easy today. Let's see what happens. We're down 5 1/4 right now, but again, anything can change between now and 9:30. Have a great day, everybody. We'll speak to you tomorrow.